Hello, welcome to Arista Advice. Question of the week is, Paul, how is the average equity investor doing compared to myself? Well, first off, all rates of return are very personalized and customized. No one client has the same portfolio at Arista Wealth. We're always customizing clients, individuals' investments because they all have individual goals and objectives. But we have some insight on some really cool data that comes from a research firm. Can't say their name, can't share a lot with you, but I can share you some hypothetical numbers. So we use the word hypothetical. They track investors of all types at some of the biggest investment firms in the country. They sanitize the data, they pull off the client's name, account numbers, addresses, and they just look at the pure economic account value data. Let me share with you and pull back the curtains. It's pretty interesting. The average equity investor over the last 30 years has done 6.8, when the broad market index has done 9.6. That is staggering. On a 20-year data, the average equity investor, the person who's trying to time the market, the person who reads the news and then goes and adjusts their portfolio and thinks that they know more than the market, they got a 9% rate of return when the broad market returned 9.8. Pretty thin, but still the broad market wins. Watch this one. On a 10-year, the average equity investor did 9.33 and the broad market did 12.56%. On a 5-year, the day trader, marketer, investor, in and out, 5.1 compared to 9.42. And on a 3-year, 4.05 versus a 7.66. Let's go back to the 10-year number. The 10-year average equity investor did 9.33 and the broad market did 12.56. Let's give each of them $100,000. The person that was always reading the news, moving their money around, thinking that they were really smart and using their money for entertainment purposes, it grew at 9.33. If they started with 100,000, 10 years later, it'd be 244,000. Catch this. The same person that looked at their account once a year, took all that extra time and went and wrote a book, rode a bike, went for a walk, went and visited their friends, and got a 12.56 by looking at their account once a year and allowing the markets to perform in their favor. That 100,000 turned into $326,000. Less emotional drag, less anxiety, less frustration, less worry, and they ended up with more money. How can you beat that? Those are the important things that we need to always remember. Always remember to have a diversified portfolio, globally diversified, low cost, low fees, and enjoy life and stop reading so much news. Reduce your news intake and increase your oxygen life intake, and the market and the portfolio will take care of you. Please remember to go to aristawealth.com to get other videos, tools, tips, and resources to help you live a life of significance.